especially if you're a first-time home buyer, don't forget, just because you moved out of your parents' house doesn't mean you're going to move into your parents' house as your first home. Welcome, everybody. Real Estate for Real People.
I'm Mary Ann Whitaker, part of the Whitaker Home Team.
And I am Brad Whitaker, otherwise known as the other half.
Yes.
Not the better half, but the other half.
There you go.
Right. You are
Thanks.
the better half.
Thank you, babe.
Yes.
I needed that positive affirmation.
Smart men know how to do this. They marry up, and then they shut up.
Never heard that part before. I'm going to have to hold on to that one.
No. It was just rhyming. I was
It was
freelancing right there. No.
okay.
Don't. Pay no mind. So what are we talking about today?
Well, in our conversations, we talked about that we haven't done a lot of exploring of first-time home buyers and really some of the thought process behind that, and kind of mix in part of what's going on in the market these days.
Okay.
You know, we're almost at the beginning of the fourth quarter of 2023. So we have some data to look back on for this year. If you notice, there were a lot of predictions last year about how housing was going to be not
In the
so
tank.
good this year.
Yeah, really bad.
And all the big guys that do data research and gather data for real estate, they have really come around. And I mean, all of a sudden, it's kind of like reporting the weather. If you're right 50% of the time, you're doing a good job. No, I'm just kind of joking. But they get to look back and see that the market was really much better than they anticipated.
Yeah.
Everybody's talking negatives, right, in the data, and it's either flat or up. So that was a good thing for everybody.
Yeah, I agree. So when we're talking about first-time home buyers, we could even probably, some of these things generalize out to buyers in general.
True.
So a lot of people start searching where it's easiest, which is usually online, right? So they're on
We all have access.
any of the big global websites for real estate. Some start with a Z, some end with a .com. Well, I guess they all end with a .com.
They all.
Yeah. Anyway, so there's pros and cons to using all of those types of online portals. So first thing you need to know is when you're on that online portal, when you click the contact an agent button, you're not going to the listing agent, just to be clear. You're going to someone who buys leads from Zillow or Realtor.com. So don't make the assumption that you're going to not get barraged with phone calls, right? So they will pass your contact information out to a small handful of agents, 2, 3, 4, 5, and then it's fastest thumbs win the day, and who calls you first or who calls you most is the other side of that equation. So just be prepared that if you are using any of the online search portals and you click contact agent because you want more information, you are going to get hammered with phone calls.
I was going to say, the reason we know this is because we have been purchasers of online leads, and so we know exactly how this works.
Right. Yeah. So we've done it, and we know the kind of the ups and downs of that for the consumer. And there's the odd scallywag out there who just who doesn't do it quite right. And so you can just get phone call after phone call after phone call, and if you're not ready for that, it can get very overwhelming very quickly. So just be aware of how they work. Outside of that,
I was going to say, one of the things that I appreciate about the online platforms like that is that it allows you to kind of get in and see what's out there as a consumer and know kind of where the prices are at these days, especially in the area that you're looking in. So it's a good place to dream or plan, but really at the end of the day, you want to get with somebody who's really an expert in that area and connect with a realtor there. But even as you're doing that, there's another step that we would really encourage you to think about, either at the same or maybe even before you start doing that.
Right. The financing side. When you're talking about, everybody wants to start where it's easiest, looking at homes, because that's the fun part. Nobody wants to get financially naked in front of a stranger, and that's what getting a pre-approval is like, right? You got to bare your soul. Sorry. You got to bare your soul. Being a lender, a recovering lender, that's the best way to explain that. You've really got to kind of put it all out there to a complete stranger who is a loan officer, because they are your conduit to buying a home. And the rules change almost weekly in their world, as the lending world. And so, rates change multiple times a day. Guidelines change as the economy is changing. Federal guidelines, the lender guidelines. Is it a bank you're working with, a mortgage banker or a broker? Hard money, soft money, no money. There's so many options out there. So we want to make sure that you are completely prepared for what is coming, right? So the first thing you need to do is you need to find a local lender. Now, I just talked about the different types of lenders, so I'm just going to break down those ones just to make it a little easier for you. Everybody thinks, national banks, so it's Chase, it's U.S. Bank, it's Bank of America, all these big national banks. And they are typically the most rigid banks, or they have the most rigid rules and are the most conservative with their money, because they can often be loaning their own money out. So they ratchet down the rules pretty hard, and you have to fit in their box. Now, if you are a high net worth individual, then they'll often give you a complete private side of their world, known as, that elite level banking. And you have a certain bank that you go to, and they've got a lounge, and it's espresso and champagne. It's kind of wild to see that side of banking. Very few of us ever get there. But when you get there, you have arrived at next level banking, right? So for the rest of us who don't ever see that, the banks are an option, but they're usually not the best option. You then have, on the other end of the spectrum, you have mortgage brokers. Now, brokers are kind of like your insurance broker. They can go out to multiple different places and find you the best product, usually at a lower rate than any of the other banks around town. But it's kind of hit and miss as to who are the really great loan officers in and around town. So you may want to lean on your realtor that you find to guide you to the right person. In the middle of those, there's a hybrid between those two. There's called a mortgage banker. And a mortgage banker can do things that a bank can do, but a mortgage broker can't do. So for example, let's say you need down payment assistance. You're a first-time home buyer. You need down payment assistance. A broker, at this point in the game, a broker cannot offer that, because, for example, here in the state of Washington, they say, sorry, brokerages haven't met the threshold of having enough money in the game, of their own money in the game, to secure if we want to go after them. Banks, they're all allowed to do it. Mortgage bankers are even allowed to offer these down payment assistance programs. So if you need down payment assistance, you have to go to a mortgage bank, which is your best bet. You could go to a bank, but again, their rules are kind of strict.
So again, I would go back to a piece that Brad just said a little bit ago. Lean on your realtor, because your real estate professional really understands the difference, or should understand the difference between those three. They know who the local lenders are that can fit into each one of those areas, and they will give you options. They should give you options as to people that might work best with you. Personalities matter, situations matter. Yeah, lean on your real estate professional. The other thing that I was going to mention is there's one other little slice that we have quite a few mobile home and apart kind of situations here in our area. And those can get sticky to get a loan. And so-
financing for.
Yeah, financing. Oftentimes they won't do it. So the only place in our area that will even consider that for newer manufactured homes are credit unions. I will take that back. I'll get a phone call from one of my mortgage banker friends. There are some mortgage bankers that are now having products that can help with that. But in the past, credit unions have always been the go-to for that particular product,
Yeah.
loan product.
So you got to be careful with that because manufactured homes, if they're in a park, it's called a home only loan. So it's not like normal financing, right?
You don't own the land.
Yeah, you don't own the land, you're renting the land, but you own the home on the land. So it's kind of like an RV park in a way, anyways, why they started calling them trailer parks in the beginning. So often you've got to have 30% down and it's a 20-year loan. And the interest rate is always higher than the going rate of the day. So even with today's rates being in the low sevens, a home only loan would easily be 8.5%, 9%. Now you're only borrowing on the home.
So it's a much smaller amount.
Right.
generally
So if you have a $150,000 mobile home in a park, and it's a really nice one at it's a decent one at 150,000. You're going to have $45,000 down. That's your 30%, and then you're going to have a 9% interest on the remaining balance. So it's not necessarily a cheaper alternative. It's just an alternative.
So that's a lot of detail. So at the end of this podcast, you will have our contact information. If you really want more information about the particulars of that, feel free to get a hold of us and we'll kind of help you through that.
Yep, absolutely. So it talks about financing, cruises over financing. So some of the things that you need to do is it's important to...
And this is for anybody and everybody who's thinking about purchasing a home.
Yep. So you got to go to a loan officer. You got to get pre-approved. We're going to suggest that you do that almost first. I mean, you can start looking online, Zillow, Realtor.com, start looking at homes. It doesn't matter if you don't know it doesn't matter what you're looking for. You're looking at $700,000 homes. You're looking at $200,000 homes. It's a moot point unless you know how much you're approved for. So you could easily get yourself into a position where you're looking
really
at homes
disappointed.
and your heart's set on something, and then you realize, I'm not even close to that. So you got to be careful about getting your expectations set up too high or too low, for that matter. Mm-hmm. Your credit score is super important right now. And as we see all the time with our first-time home buyers, they are usually car payment heavy, which eliminates almost immediately your ability to buy a home.
Because one of the things that lenders look at is your debt to income ratio. And so if you have a lot of debt taken up by car payments, taken up by credit card debt, all the toys,
student loans, whatever.
Those things are really going to impact how much debt you can additionally take on for a home. So just be aware of those things. Maybe put home first. That's going to be an investment, a long-term investment versus the toys. I know we are all creatures of, wanting to be able to have fun and go and do, but really for financial health, I would say if you can flip that script, that would be a really good idea.
Mm-hmm. So let's say you have a $500 a month car payment, right? We're working with somebody right now. Their car payment's $600. So that payment alone would eliminate about $120,000 of buying power for a house just because they have a $600 a month car loan. That's going to wipe out $120,000. So if they would be eligible without the car payment for a $300,000 home, they're now eligible for a $180,000 loan. And
It makes a
the
difference.
difference between those two homes is one you are okay to move in, one you wouldn't let your pets move in our neck of the woods, right? And then there's other parts of the world, $180,000 home doesn't exist, right? And then there are
And the
some,
reverse, I
and
was gonna
others
say.
where there's lots, right? But it just depends on whether you want to move to the middle of the country or you want to stay by the edges, right? Anything by the edges, far more expensive. Anything in the middle, far less expensive and a much better
Generally
bang for your buck,
speaking.
right? Generally speaking. So, yeah, so you got to be careful with your car payments. If you can have none, that would be awesome. But just be aware that car payments kill when it comes to buying a home if you're a first timer.
What
Yeah.
about credit? How does credit, healthy credit, how does that play into this whole scenario?
You know, that's a good question. So, from a lender standpoint, credit is looked at in a few different ways. Number one, they're going to look at your payment history and they're going to look at how many lines of credit you have. So, and credit is based in a score range. So, I think it runs from about 450 to about 800. And you could be anywhere in that range. And there's also 3 different credit reporting agencies that will give you a score. The mortgage people will pull what's called a tri-merge report. They're going to pull all 3, and they're going to take the top score of the 3, middle score of the 3,
They take the middle score.
middle score of the 3. But then between you and your spouse, if you're or your girlfriend or your boyfriend, if you're buying together, they're going to take the lowest middle score. So just because you have a great middle score, if your significant other has a crappy middle score, they're going here as the starting point.
If they're going to be on the loan.
Right, if they're going to be on the loan. Now, there are some loans out there that require your spouse to be on there. VA, if you're not married, your spouse can't, your girlfriend or fiance cannot be on the loan with you. So that's a rule, right? With USDA, for more rural properties, they're going to count everybody's income in the house. So you have 4 people that rent from you and they're all working at Domino's.
Or you have kids in the home that are working outside the home.
Yeah.
Their income counts.
Right. And so there are limitations as to how much money you're allowed to bring into the household to even get the loan. This is why, I mean, and these rules are hard and fast for a moment, and then they can change in a blink of an eye, right? So, because USDA is funded by the U.S. Department of Agriculture, and the loans are all basically held by Chase Bank. But when the government says we're out of money, we haven't reappropriated more funds, the USDA loans stop. And we've kind of bumped up against that a couple times in the last 10 years. So you have to be careful, and you have to be working with the right loan officers who know their stuff.
Yep.
So all the different loan products out there, there's
So I'm going to insert a little bit.
Yeah.
Again, this is a lot of information, but if you get with a trusted lender and a trusted realtor, they will guide you through this. This is not something that anybody expects you to be able to do on your own.
encourage you not to do it.
Yes, I mean, really, seriously. There are a lot of moving parts. And so getting somebody that can kind of help you manage those parts is going to be critical to your success and less stress during a transaction. So.
Yeah, and so we're hitting the high points here just to help you understand the complexity of what you're stepping into. Okay, you're never expected to know all this stuff. In all honesty, in our world, we don't want our realtors to know all this nitty gritty because we want them to stay in their lane, right? We want them to be a realtor. We don't want them to be your lender and your escrow agent and your home inspector, because then they're out of their scope of excellence and they're going to get themselves in trouble, and often you in trouble. So stay focused where the people are professionals, right?
Oh, and the other piece I was going to say about that is just because your realtor shouldn't and doesn't know all the ins and outs of lending, they do know lenders that know their stuff and work well and communicate well with all parties. And that communication piece, honestly, folks, is one of the biggest pieces in any portion of a transaction, whether it's communication between you, the client, and the realtor, realtor to lender, lender to you, all those pieces, because there are so many moving parts, that communication piece is critical.
So you'll find lenders are so busy, they've got this big team built around them. So you might talk to the main lender once. They'll take your application and then you'll never hear from them a second time. It's always their team talking to you. So that's one way that you might run into a lender. You might run into a lender who is just them. They don't have a team, so they're all you hear from. And there's pros and cons to having that both ways, right?
And there's in the middle
Right.
too.
Yeah. So it's, just understand there's lots of ways that lenders can structure their business, just like there's lots of ways that realtors can structure their business. You can run into a real estate team and have the same thing. The team lead, often their name is attached to the team, and it's that's how they market everything. And they may have a couple of buyer's agents, they may have an admin, they may have a listing agent. So you could be talking to anybody on that team, and often will. I mean, we've had transactions with agents to our south, and there's 9 people on the team, and you are getting bounced around constantly as a realtor. So just understand that that's kind of the stuff that your agent is going to have to be dealing with if you make an offer on a house that is listed by a team.
And mediate for you,
Yeah.
right? So
Yeah. Really,
yeah.
that's our job,
it is our job.
is to be the third-party neutralizer. Because,
Coach.
Yeah, coach, because it can get frustrating.
Coach and guide on the side.
Yeah.
Yep.
True story. So not to beat a horse, but let's really get with a lender who's good, and the communication piece is critical because we've seen the frustration point of some of our agents. We felt that same thing where the loan officer or the real estate agent will not be communicative back and forth, and that is so hard to get through a transaction if nobody's telling you what's going on. So work with people that are professional and that are good communicators. If your loan officer is a 9 to 5 person and they won't pick up their phone on weekends, not a good option. I'm just telling you right now. They may say that, oh, well, I do all kinds of work 9 to 5. Well, most of your real estate agents are not working 9 to 5. They're working well into the night and much earlier than 9 a.m. So
And on the weekends.
And on the weekends. So if you want to make an offer on a weekend and your loan officer won't pick up a phone or hop on a computer and you want to
get
make
you
an
a
offer and you
pre-approval
don't
letter.
have a pre-approval letter, you're done. You don't get to write an offer that weekend. So make sure that you're working with a loan officer who works on weekends, right?
Flexible.
Right. And most of them say they do. The odd one says, nope, sorry, after 5 o'clock, it's my family time, which is their right, and that's totally fine. But that's not what's in your best interest, right? That's how they want to structure their business. That's totally fine. But if you want somebody who's a little more responsive, one of your first questions when you're interviewing your loan officer is, do you work evenings and weekends? Because if you're out there...
Or can I get a hold of you on evenings and weekends?
Right, yeah.
Because, it's very different. We find even in our world, we may, go to the beach on the weekend, but I still answer my phone if I have a client calling. I don't consider that, in my weird head, I don't consider that work. It's just what we do. Yeah, I think with most of the loan officers or lenders that we work with, they do that. So
Yeah.
we're all on the same team.
And the reality of it is, you're only going to need them evenings and weekends while you're looking. Once you get under contract, it's all 9 to 5 stuff, right? But that first part of getting your home under contract is one of the more stressful parts because you may be competing with others. You may be pushing right up against the high end of your limit. And it's down to, well, if the property taxes are below $200 a month on this house, you can get it. But if they're $205, you don't apply. You're not approved. Right. So, it can be something as simple as a $5 difference on a homeowner's insurance policy or property taxes. So a good loan officer will help you with all that. So what other stuff do we need to warn them about? Oh, when you walk into a house, please understand, have a conversation with your real estate agent and find out what's going on in the market. You may be coming from an area that is very well priced. You may be moving to one of the coasts from Middle Tennessee, where you can get homes for 60 to 80, $100,000. And you're moving out here and you can barely get raw land for that, right? So adjust your expectations. If you are coming into home ownership and you've been a renter up until now, especially if you're a first-time home buyer, don't forget, just because you moved out of your parents' house doesn't mean you're going to move into your parents' house as your first home. Okay? If you were living in a really nice house with your parents or any kind of a house with your parents, please remember that they've worked probably 30, 40, 50 years to get to that point, and you haven't, right? So
You didn't see the one-bedroom apartment and the top ramen that your parents were probably eating when they first started off on their, life journey, their adult life journey. And so just be aware that where they are currently is not where you're starting off, is kind of what Brad's saying.
Right. Very rarely do you ever get to a spot where you can jump into exactly the same spot your parents are, right? So make sure that you have your expectations adjusted properly, right? And your loan officer will help you with that, which is why we suggest you go to the loan officer first, find out what you can afford, and then go and start shopping, right? Now, if you want to talk to a realtor, they can refer you to a loan officer. When you talk to a loan officer, if you happen to talk to them first, they can often refer you to a realtor. So it works both ways there, right? They're happy to refer back and forth. And the loan officer will often be able to tell you a really great realtor to start working with. So, that works both ways. So you don't have to worry about whichever place you start, you can always get referred the other way.
All good.
So we've talked about debt.
We did talk about debt.
We've talked about expectations. Do you want to talk a little bit about the home inspection?
Yeah. So, as a home buyer of any kind, there are a couple of pieces of financing or financial nuggets that you're going to want to take care of or have in the bank. When you start that home buying process, when you get under contract, there are two pieces, payments that you're going to want to have in the bank. One is a cost for a home inspection, which runs about $500-ish around here,
depending on the size of the house.
Size of the house, depending on the inspector. So that's a piece of money that you're going to want in the bank. The other one is something called earnest money. So earnest money is money that you will pay to not the seller, but it's an amount of money, usually about 1% of the purchase price, that is kept in an account at a title company, third party, nobody has access to it. But that money says to the seller, this is my good faith offer. I am really seriously interested in this home. So to show you how interested I am, I'm going to have this money set aside so that in case I default on the contract for some reason, Mr. Seller, Mrs. Seller, you get to keep that money. If the contract goes through as it should, as planned, then that amount of money actually goes towards the buyer's purchase of the home. So
you don't lose it.
You don't lose it. It could go to the down payment or
yeah.
whatever is needed for the transaction. So, like I said, that's usually about 1%. That's a loose rule. But you'll need to have that in U.S. funds in your bank to be able to do that.
Right. So to do the math real fast.
Yep.
1% of a $250,000 loan is $2,500.
Yeah.
Right? A $350,000 home, $3,500. Now, if you don't have $3,500, does it mean that the seller won't take your offer?
No.
Probably not. You're going to be okay, but you're going to want to have nothing less than $1,000. Just saying.
I'd actually say $1,500, but
yeah. Well, we've seen some people, like especially with the VA loans,
yeah,
where you can't keep the down payment or the earnest money anyways. I've even had some offers come to me with no earnest money.
Yeah.
So
but that doesn't happen very often.
Yeah, and that's really up to the seller. The seller can say, I'm not accepting that offer if there's no earnest money. So just be aware that you're going to have to throw some kind of earnest money at this thing. And then if it's a manufactured home, whether it's on land or in a park, there's another fee. What's that?
Oh, yeah.
Let's talk about that.
So, mobile homes are unique beasts. They are either tied to the land, which makes them real estate, or not. But the physical piece underneath the mobile home, they are usually anchored with what were called tie downs. And so mobile homes come under the guidance and authority of LNI. Labor and Industries. And so there is a specific inspection that has to be done to make sure that that is taken care of. And you get something called a foundation cert when that is done. So that's another.
That's not done by LNI.
No. But it's done by a home inspector. But LNI, if there are any other inspections on mobile home, LNI can do those. For example, roof,
porches, decks, add-ons, anything like that.
If a buyer is concerned about that, they can have an LNI inspector come out and take a look at them. So that foundation cert underneath the mobile home costs about $450.
Yeah, the frustrating part is the foundation cert, it's kind of a two-part thing. Your home inspector, when he's underneath your home doing the inspection, he'll take pictures of the tie downs and the stabilizers in the corners and things like that, and the tripods.
Some home inspectors will do that.
Right. Well, yeah. So you have to ask your home inspector if they will help you with a foundation cert. If they are not tied to an engineering firm that can get you that cert, then you're going to have to pay someone else to come and do that. And it could cost you a little bit more money. So if you can find a home inspector who does both, does the home inspection and the foundation cert, that's going to be perfect. So the foundation cert is nothing more than a piece of paper. Right, you'll spend $450 paying the engineer, and all he's going to do is change the address at the top of the page and email it to you. It's a cash cow for them, but it's a necessary evil for you because your lenders 99% of the time, they're going to require it to get a loan.
Well, in all honesty, we've had some transactions where the tie downs were not in place correctly.
Or there
at all. And so yes, it's important.
Yeah. So the tie downs, oddly enough, stop the home from tipping over because they're on these pier pads underneath the home. And if you get an earthquake, your whole home could just tip over. So the tie downs anchor it so that it's solid to the ground. So yeah, it's interesting how this all works, but tie downs are critically important and they're a code requirement. And so if your home was built in the last 15 or 20 years, it's almost zero chance that there's not going to be tie downs. But the foundation cert has to be done anyways, right? So that's an added expense. So you've got almost $1,000 in home inspections if it's a manufactured home, whether it's in a park or it's on land that
if you're
is
financing.
Locked. If you're financing, right? If you're paying cash, none of this matters, right? No lending,
you
no
have
home
options.
inspection, right? Yeah, so you've got options that way. Most of our first-time home buyers aren't throwing cash down to buy a home, but still, that is true. If you're paying cash, the rules all change. So we talked about some inspections. L&I, manufactured homes, very different. Financing. What else?
I think one of my suggestions, it's always nice to have family involved, when you're looking at homes, especially as a first-time home buyer. And I would just lend a little bit of caution to that as well. So being a parent of 20-something-year-olds, we want to make sure that our kids are taken care of, right? That nothing undue happens to them. But it kind of goes back to what Brad mentioned earlier about starting off in your first home. Invariably, in any home and with every inspection, please understand that a home inspector's job is to poke about and find every single thing that is wrong with the home. Every single thing.
Cracked light switches.
Every single thing.
Wells
So
that don't work. I mean, everything.
you will get a 40 to probably 65, I've seen them more than that, 70-page inspection report with all these things that are wrong. Most often, a lot of those things are minor, like Brad's talking about, a cracked light switch. Oh gosh, I can't even think of.
Tile grout missing.
Right.
You know, a clogged shower drain. It's simple stuff.
Right. So you will never, and even in a high-end home, you guys, it's not just first-time home buyers. There are things wrong with every single house. We purchased a home that was pretty expensive. We had a home inspection done on it. You would never guess what was found in the attic because, shocker, we or people never usually go up in their attic, or not much, or down underneath the house. Who wants to go down there with spiders and snakes and creepy crawlies? And what was found up in our attic was a very large area of bat poop, because they had found a small opening up in the vents and they had just made themselves at home. So it's going to happen on every single home. So kind of circling back to having Uncle Joe, who used to be a contractor, tagging along, that's great for perspective, but if Uncle Joe is expecting that you're going to buy a house that is perfect and doesn't need any work, they will often do more harm than good in giving you advice. We've had this happen a couple of times in our transactional life. And so having an opinion, just be aware that the people that you include in that process can either help or hinder you purchasing a home. So be wise and thoughtful about that. Oftentimes your realtor, if they are being a hindrance or not really giving you good advice, may have a conversation with them and you about that. But uncomfortable conversations are not everybody's forte, so just be aware. I mean, having other people's input is, I think, comforting and can be helpful, but it also can be harmful in the process.
So. Yeah. So we've seen parents or family members derail the transaction for no reason. We've seen them keep them on the rails for every good reason. So I mean, it's a mixed bag, depending on.
I think it's
who's
expectations.
There. Yeah.
Make sure that your expectations for your first home are, you kind of have what you can handle in a home as far as maintenance and updating and all that, and what you can't do, and have a conversation with your realtor about that too, honestly, because we have been doing this for a while, and we will be honest in telling you these things really do need to be fixed, or you know what, that's a 35-cent fix. Go pick one of those up at Lowe's. It's not worth tanking this deal over that little light switch.
Yeah. So owning a home, I'm going to super simplify this, is kind of like owning a pet, right? Don't buy a puppy if you don't have thousands of dollars for shots and well care visits and all, and the best food for your animal. You know, I mean, if you want a healthy animal long term, you're going to have to invest in that animal, right? A home is the same thing. Buying a home, you're not just buying it and it's static, it never changes. You're going to want to update it. You're going to want to change the paint and the appliances, and something will break inevitably. So, you know, and buying a home is expensive, and maintaining a home is,
depending on your home, it can be very, very expensive.
yeah, well, and it's kind of like a car, right? I mean, don't drive a car thinking that you're never going to have to change the tires or the brakes or change the oil. I mean, all of these things, you don't just sell the car because it needs maintenance, right? So you're going to have to maintain that car. or
It's an
maintain that pet.
investment.
Right,
It's an investment. And so when you have an investment, you take care of it. When you see a gutter that is at the rainy season and it's dripping,
It's
and
overflowing
it's
over the front.
overflowing, take note of that.
Hop on
and
your
ask
ladder.
the question, why is it doing that? And go figure it out. And if you need help, it may be just it needs cleaning. Or
It's got leaves in the gutter.
Or there may be rust on it and it needs to be replaced. But you've got to take care of it. It's not just going to go away and it's not going to fix itself.
Right. And something as simple as a gutter, when it gets full of water, it can often just tear off the front of the house and then you have no gutter. So take your time and get on a ladder. It's pouring rain. How many times did I have to do that at Lone Oak? Yeah, I mean, gang, just do the maintenance on the home and it will last you for a long time. If you don't, you're going to be paying probably bigger bills to repair or replace.
Yeah.
So,
In kind of to wrap up what we're talking about today, think about if you are in the market for a home, who are you going to go to for lender? When are you going to start dreaming? When are you going to reach out to a real estate person? What are the things that you can be doing ahead of time to get your finances to a place that is really healthy for a transaction, for a purchase of a home? And then connect with the best realtor that you can find, one that you personally connect with, one that has your interest at heart, one that is really all about you, not about the money. Because if they take care of you, then everything else will take care of itself. Anything else for today?
I think that point is critical. Just realize that just because you meet a realtor for the first time doesn't mean you have to stay with them if you don't mesh with them, right? If your personalities conflict, go find somebody else, right? I mean, this is a business transaction and you can't allow the emotions to get in the way or the fact that you don't want to tell that person, see ya. This is somebody who's going to be in your life for a very short period of time, 30 to 60 days.
But it's an intense time.
It is an intense time.
So you will want to be with somebody that you trust, that can have those conversations with you, and you can have those critical conversations with them without feeling like you're stepping on toes or eggshells or anything. So it's 60 to 90 days. Well, 30 to 60 days, I guess, now.
From the time you get into contract.
Right.
Could be 6 months looking for a home.
That's true. So it's a long-term, short-term relationship. Be in it with somebody that you trust and appreciate, and that appreciates you.
And enjoy being around because, I mean, you could be spending hours every weekend with these people. So, I mean, it's
If
helpful.
it's stressful enough,
Yeah.
do it with somebody that you like.
Yeah. Don't have to deal with the cranky pants just because that's the first person you come across. Okay?
Thanks for joining us today.
Right. We'll talk to you all later.